The next task is to prepare our statement of profit or loss for the year ended 31st December 2018. So I have added several comments. Okay, so when we prepare our SOPL, it must be prepared according to accrual basis, meaning revenues and income listed in SOPL must be revenues earned and expenses incurred. Revenues earned means revenues already received and also receivable. On the other hand, expenses incurred mean expenses already paid and also payable. Okay, so here we have the first item, sales. If you can see, there are two figures there. Yeah, the working consists of two figures. Okay, so the first figure, 298,100, is our credit sale. And this amount is obtained from our account receivable. The second figure, 60,000, is from our bank account. Okay, so if you refer to your question, we have a cash sales of 60,000 ringgit. So both must be included in our SOPL here. The next treatments are for our return inwards and discount allowed. These two are recorded in our additional information. Okay, next is our opening stock under COGS, which is cost of goods sold. We have opening stock plus cost of purchases minus closing stock. Okay, so opening stock and closing stock are retrieved from our table listing down our opening and closing balances. Okay, this one. Okay, our opening inventory and closing inventory are here. Okay, as at 31st December 2017 and 2018. Now, for our purchases, the same concept applies as our sales. Okay, so it should include all credit purchase plus cash purchase. However, in this question, we do not have any cash purchase. So we only have credit purchase, which this amount is retrieved from our account payable. We also need to deduct any drawings in terms of goods. So that's why we have minus 2,000 here, because the owner made a drawing from inventory. Next one is minus expenses. Again, I repeat, expenses here are expenses incurred, not expenses paid, because our SOPL are prepared based on accrual basis. So we need to record all expenses between 1st January until 31st December 2018, regardless whether they have been paid or not yet paid. Okay, so that's why for rental, we do not use 23,000 ringgit. That is the amount of rental paid. But we use, or we record here, rental expenses for the whole year. So since the information provided was the rental expense was 2,000 ringgit per month, so for the whole year it is 24,000. Same goes with utilities. Okay, shown in the bank items, okay, the bank already paid, the business already paid 13,000 ringgit. But there is a balance of unpaid utilities expense of 2,700. Let me go back to the question for you. Here it is. We have utilities expenses, 13,000. What is this? This is transactions through her bank account. So meaning, throughout the year, the business has already paid 13,000 ringgit for utilities expense. However, if we go to the list of balances, as at 31st December 2018, we have an amount for accrued utilities by 2,700. Meaning, at the end of the year, 2,700 ringgit is not yet paid for utilities. Therefore, for utilities expense incurred during the current year, it is the amount paid plus the amount not yet paid. So the whole amount of 15,700 is the amount of utilities expense incurred during the year. For other expenses such as salary, bank charges, stationery, and donation, there are no adjustment needed because there are no amount accrued or prepaid. The next one is depreciation expense. Okay, so this amount is stated in the additional information. Okay, so these two figures must also be included here. In this example, there is no item for other types of income. So, therefore, you don't have anything here before the expenses. So, finally, we arrive at a net profit for the year ended 31st December 2018. And the amount is 182,430 ringgit. Okay, so this amount will be transferred to SOFP.